Thanks everybody for joining today. It is 8:12. It's Wednesday, and it's our next exciting installment of the weekly webinar. I guess today what I wanted to do was just do a couple of quick views here for the indexes. I actually think it's a pretty simple setup, and I don't want to dig too much into it. I think it's I think long story short here, I think we're kind of in like a final wave 5 here, and the volume's declining a lot. So I was kind of thinking maybe spend a little bit more time like on gold and some other stuff. So I will make sure to share my entire screen in case I screw it up. All right. Okay. So we're looking at the S&P here right now. I've got some extra junk. Let me clear this out. But kind of what I'm thinking here is, let's go to zoom in a little bit. For this entire kind of thing, we had a lower low. Sorry, we had a higher low, and when this actually ended up bouncing here last week, we talked about the blow up with the situational awareness fund, and also like some short covering, which I think kind of really jammed up the market here. So this kind of squeeze or covering rally or whatever, they don't really last too long because we can obviously see there's a lot of like selling up here, but my concern is more along the lines of like how long is it really going to take before you start to see some sort of reversal. So I know a lot of people have like options or some sort of like time based sort of trades going on. So I think just to kind of take a quick little view here. I do think that short term, we're going to see a little bit more selling. I don't know if it's going to be a lot, but I think it's going to be at least something. Maybe we'll get a little bit lower below, but ultimately here, I think we'll probably see 7,800 probably sooner versus later. So the last high here was the last high was 77.93 for the S&P, and this just kind of looks like a 5-wave sort of pattern here, but the wave 4 that we're looking at least if it is a wave 4, what this is, I'll just move this out of the way. I think we had a pretty firm rejection with some high volume here at this 77.93 level. It was actually kind of a nice round number too, so that makes it a little bit more helpful. And usually when you get a round number like that, you can kind of see that there's conviction behind the trade. So one thing I wanted to kind of call out here is that oftentimes we see like pattern expansion, and this is I'm going to kind of show you the bullish scenario here first. So usually when you have a triangle like this, it's pretty tight, and when we're seeing these sort of things develop here, at first what you look for is like it's sort of like this ABC sort of thing, and if that doesn't really happen, and normally the good bounce point, and this is sort of like a teaching example, for those who want to like go long or just in general like consolidation patterns. So like after you have these big giant rips out of nowhere, that just don't stop. When they do stop, you do kind of see something like this where it's a pretty firm rejection on higher volume. But then also what you're trying to figure out is what the next sort of move is going to be. So typically when you look at these sort of patterns, you're really trying to look for something like this, some sort of like ABC sort of corrective wave here. I think that the probability of this happening is probably, I'd say like 60%. Every time you have like one of these big rallies, because they always have some sort of consolidation period, and usually a higher high. So when you're looking at something like this, I guess the rule of thumb that I typically go by is whenever you retrace. So let's say, I'm see if I can get this up, boring you all to death. Typically your 0.786 line here is like your bifurcation level, and that is like it's bearish below and bullish above. And the reason is, at least like when you're trying to forecast out like the first pattern. So you don't really know that until you have this secondary sort of like the secondary sort of leg. So what I mean by that is you always kind of get one of these. You get a sell and then a recovery. And then once you have that, that's really like your first kind of wave or pivot point. So the probability of figuring out which direction which direction it's going to go increases significantly. I mean, I guess as far as I'm concerned. So I guess rather than focus on like all the whys and stuff, I guess just know that typically you're looking for something like this in order like this a hit on this 0.786 level or close to it. Usually you'll see some sort of like dip buy or something like that, but that kind of gives you these reliable points where then you can assume that you're probably going to fill out a triangle. It could be a triangle, or over time maybe we have a lower low and maybe we make like maybe we make some sort of bull flag or something like that. But ultimately what you're looking for is this first 0.786, because odds are you will see an equal sort of move on the next leg up. So what you typically do is you measure, or you keep measuring at least from the peak to trough to kind of figure out like what your bounds are. So really, this tradable range here is between the two white lines. So the 786, and you can already kind of see that already happened, right? So we already got this, ping pong back and forth, and you can kind of see how, we got that 0.786 retracement touch here, and then you got that second part that touches here, and most likely what you'll see is just this trading range between, let's say 7772 and 7715. So that's kind of like you're pretty safe to go long or short, really, in those in this kind of range, because short term you could have some pattern expansion, but also like you still have some downside protection after something like this major move that happens so quickly. Eventually, you will get some sort of retracement that's a little deeper, but we have to kind of finish that last kind of thrust up yet. So this is just like profit taking right now. So what we're looking for, I guess, is either a continuation or something else. So now that we've got our kind of like this tradable range together, usually you draw your trend lines here for whatever the peaks are. But I like to call this sort of thing pattern expansion. So pattern expansion is really where you like the bulls try to see how much seller enthusiasm there is, and they try to crank it up until some bigger sellers step in. So this kind of gives you that, just kind of just creeps a little bit more open as it kind of develops here. So typically what you'll see is sort of like an equal move to the downside. So what I'm thinking here is, well, I shouldn't say thinking, because this is kind of like a proven sort of pattern. Realistically, what you can do is, now that you have this new like connection point, you can start to kind of map this out. There's typically 5 connection points in a triangle. You can have more rare situations where you can have it just keep get smaller and smaller and smaller. I think we had that in gold like a year or two ago, but still it's a little hard to spot. I guess that's why I have a job here, is to help you guys figure that out. So typically when I'm talking about pattern expansion, usually I look for symmetry on a higher time frame. So you kind of like, this is sort of my my assumption here, that we'll see, I would say probably like tonight or maybe tomorrow, because we did get that slightly, or at least like that above trend line high here, not a higher high, but still, still kind of expands that. So when you do see this sort of move down, you always look for another ABC in a triangle. So that's kind of why I'm thinking you might get somewhere close to, let's say, 77.15, or maybe something like that for the S&P. And if I show, Here we go. So if I show SPY, or sorry, let's do SPX. This is the options map that we had today. So if I show the options map here, you can see that kind of right around that 77.15 level, that's when you get that volatility trigger, which can mean usually get some dip buying. But when you're really, when you're digging into this stuff, if you get that little pattern expansion, I don't really think it would go below like 77.10. I think the triangle is pretty much locked right now, and if it goes below that, it's bearish. But if it's above, it still remains bullish. Even though you could still make a little bit of money, with trying to play both sides. But I just kind of wanted to show you that options gamma does make a big it does make a big difference and kind of like set your tradable ranges. So for the week here, I would say it's unlikely that we would head much lower. There seems to be a decent amount of buying. I think there'll be some support here, but so I guess the case I'm trying to make, it's not really a case. I guess it's more of like just trying to a teachable kind of thing, is that even if we get this sort of move down and you get some sort of dip buy, I mean that might be a nice dip buy. You could again below it is probably bearish, so you could set a stop. I still probably wouldn't do any large positions with how crazy things have been lately, but it's also really really close to the top. So at the top, it's a nice kind of thing to maybe have a shorter, maybe take some profits or something off the table. But when we if when we have some sort of dip buy, then the bullish scenario here is really you're looking for this kind of breakout higher. Now, typically, when you do have a breakout higher, it can be short-lived. So you probably would see something like this, where you get like a 5-wave series to finalize this pattern. So this kind of wave forward thing, this is where everybody takes profits. This is where they adjust to short positions, and then you have typically you have a very low volume pump to get up to that last little bit, and then that's when you get the larger multi-day kind of sells to push that back down. So that's kind of like the short-term bullish scenario for, I would say, the rest of the week. It's probably, I don't know, I do think we'll probably end this week probably slightly higher. If we look at the weekly chart, oh man, get that higher. Yeah, so if you look at the weekly chart, you can kind of see here that even if it ended just a little bit higher, we still don't have a lot of movement here. So I know it's a little bit difficult to see, sorry. But the volume is very, very low. You have one of these spinning tops, they're also called dojis, which really just means indecision. That means just, there's a lack of motivated buyers that continue pushing this thing up into space. And also too, you're getting really close to now, multi-month long-term trend lines. So there's a case to be made here that on the short-term time frame, you could see a little bit more upside here, but this does kind of this is starting to kind of resemble like you've got your like long-term sort of setup here for your wave counts. It looks a little sloppy. This wave forward was very, very lazy and took forever. But if you think about it, if you are getting to some sort of major top, then having a really long kind of wave forward, like that's distribution, that's selling, that's people getting out of positions, whatever. It doesn't really matter. Usually the longer it goes, the more intense the move is in the other direction. However, I still think now we're in this like kind of wave 5. Like a wave 5, like a final wave 5 of this move that started back in March of 26 here. So usually the hallmark of a termination in something that's been super bullish for a while is you can see the volume dropping off a cliff like that. You see a lot of these kind of sell spikes here. This is when we had a bunch of crazy stuff going on. But still, we had some selling and things like that, and you can see a lot of this distribution here. It's very heavily sell side, in my opinion, and you also got a lot of this. I think this is sort of like knee-jerk reaction selling here from maybe some Iran news or whatever. But I wanted to kind of explain this because if you're just going to go long and stay long and be blind about it, or just not really care. You kind of give up. You're like, I don't want to short anymore. I mean, shorting's not for the weak, and you don't have to short. It's just more of like, maybe it is a good spot to take some profits, because longer term, the bulls are kind of looking like they're getting a little bit tired. And I guess the evidence I have for that is like, I mean, I stare at these charts all day, every day, and you kind of notice things in the price action. This last little leg up here, I shouldn't say little, this last leg up here that covered this whole distance, a lot of that was fueled by margin calling and Citadel, Ken Griffin buying a bunch of shares and driving up the price and short squeeze and stuff like that. But it still looks like a wave 5. And then I guess the correct terminology would be, this would be like your wave 5 of 5, if these counts are correct. Now, excuse me. Now you could potentially see, and this is just kind of how it looks today. So we could model out something a little bit more, I guess a little bit more like slightly bearish. So I'll try to, I guess the more bullish scenario here, just real quick. And again, we'll cover this next week when we have a little bit more price action. But you could have a little bit more consolidation this week, and then you could have another very fast, low volume run up like this. But I think in the grand scheme of things, you would have some very low participation there, and I don't think that the price would last very long up here. I think you would get a pretty hard sell after that. I kind of think like the blow off top sort of thing we had here was mostly here. When you were back in April, where this just went bananas. We covered a huge amount of ground in a very short amount of time. But anyways, this is kind of what it looks like to me here, and the longer term, I guess, a couple of weeks, I guess. I kind of think, we might not have any real like material selling in August here. I kind of feel like it's setting up for September. Like September, October, we could have, a decent sell off, as is tradition with September, October, except for last year. We didn't do that, that was irritating. After I publicly declared, yay, it's selling season, then nothing happened. Oh man. Well, hey, when you make jokes, be prepared to answer to the piper when it doesn't go your way. But anyways, this is the I would say the bullish extension. Now, I really think we're going to need to have some sort of catalyst for this. It sounds like rad stuff's not going well again. I mean, it's a circus anyways. So I really wouldn't. I think that trade's kind of gone dead here. That the star power has been kind of or like the headline shock has kind of worn off a little bit, because I think people are kind of figuring out that it's all for some sort of gain for some other people. So anyways, this is still the bullish outlook. So hopefully I covered that well enough. I guess Roll asked, did that actually make sense? Okay, cool. Well, as long as the check and the balance over there tells me it makes sense, then that's great. I'd say there's probably one small little scenario where you get a shoot up a little bit more. Again, it's more like pattern expansion, and then you might get that corresponding lower low here on the sell side. But it's still a consolidation pattern. They could be infuriating or they can be profitable, but this one isn't very wide. This one's kind of lame. It's been very kind of quiet. So I think so for the bullish, or sorry, for the bearish sort of projection here, I think probably what we could see is again, we didn't really see like a higher high here. I mean, it matters if you're measuring it from some sort of like trend lines or whatever, but I think what you could see so let's forget about these fib levels, and I think we could see something that's like this, where it's a little bit more of a deeper cut. And typically how you'd measure that is you always want to start out at the bottom of like your wave 2. But now that it's kind of looking like the longer term wave 4 of this whole sort of move up, then you want to include the whole peak to trough. So I don't think we'll see a typical wave 4 move down like to 7,600. I think that would be pretty steep, but especially if we don't have a lot of a lot of buy support here. It just, they just might keep it pinned. But I think you could see something like this with a very, like, I'd say, bearish short-term kind of scenario. And typically when you see a flag, it's still sort of the same count. It still has like 5 connection points. So you could see something like this, and then it just continues up. It doesn't necessarily look, I mean, I guess when I see something like this, where you got a lot of volume today, from the bears, and it just kind of, keeps selling it all day. Like, the bears are definitely in control all day, but I think overall, I think there's still some accumulation that's going on here with some buyers, but you can still sort of see that, I would say, like in the last couple of days, when you just do this last little bit, so just from the bottom here, this little wave B, you're starting to see some accumulation of shorts right around this 77.50 level, and I think that that's probably just going to continue to grow. But you do see a buy imbalance below this, but I struggle to, usually you get a lot of one-sided when you're looking at volume profiles when the pattern isn't quite complete yet, but you can start to see where like the zone is going to be to add shorts. So it's sort of like in this zone here, I think, like I said in the beginning of the call, it's like, you could either long or short it. I think it's probably a better idea to just take profits and not short anything, but look for a good dip to buy with some higher volume. I just don't think the market's quite ready yet for a larger sell-off. We would have seen that before, but again, like, if this wave 5 theory is correct here, then we should see either a slightly higher high or continuation high up a little bit more. But after that happens, then I think things are in trouble a bit. But for now, I would say, right in this area, like, I took out some put debit spreads with like a 2 or 3 week horizon here, just for some, like, a quick funsies kind of fun money trade. But I would say overall, this is kind of like your short zone, and I think you should be all right with that. Maybe stop above or something like that. But anyways, that's your short-term kind of bear scenario. There's another scenario here where you could see more of a I guess more of a complete breakdown. There's another sort of drawing here. It doesn't look very. No, that's not correct. Sorry, no, I don't want to show that. But you still have this kind of like upward sort of channeling, and what you could see with that is it's sort of like a ABC move lower with that. It could be a little bit deeper, especially if this ends up not being. I think we talked about this last week, where I was kind of thinking that this might be like a one giant sort of corrective ABC. Here, let me put up the. There you go. So I was kind of thinking it'd be like one giant, kind of corrective thing here, and it the counts work. It does fit, but if that's true, then this will be like the first series of ABC down, and you won't see that wave 5 up higher. I don't really know if that's going to happen. I still think we'll probably get slightly higher highs, but it's still the longer term bearish sort of scenario. If I measure that out right now, I still think that we have a little bit more to go. Yeah, I'm just not really seeing anything that looks that just jumps off the page at me. That's going to be spectacular, for like a short. So I would say for now, just kind of let it be. There'll be better entries. All right, so now let's. Hey, Dad, you got a question?
Not a question. I'm just gonna. To me, it looks like I take that little tail that's sticking up, cut that off, and it just looks like an ascending triangle, like an ascending triangle that's going to break to the upside and go to 88,000.
Yeah, yeah. I mean, you could certainly make that case. I think.
I think it's just kind of peeked through, but you got like pretty much a line going straight across there. If you take that little if you take that tail off, just go from below the tail, go straight across.
Where? Sorry, I'm not following.
That you have that wick sticking up in the air
Oh,
at the
yeah,
top there. If you take the wick part off, it's just a line going straight across.
Oh, okay, okay. Yeah, I think you could still.
And that's like a major, like that 7765 area on the SPX is like a significant number.
Yeah, I think you could still see. Again, because I do see
I
some
mean, you could
accumulation
do a
here.
triangle too. I mean, you could make a pennant out of it by using that wick sticking up in the air, but that
Yeah,
was kind
yes.
of like it peeked through and said, "Not yet."
Yeah, and I kind of think it's the same sort of concept where it doesn't really matter like what the pattern turns into. It still is, I would say, probably like 65 to 70% here. It's
Yeah.
confidence. It's going to be like a way forward into 5, just
Unless
because
they get like a real scary number tomorrow, which is not likely.
yeah,
I think they want to take this thing up to 8,000.
yeah. I don't know if we'll get 8,000 quite yet. I'm thinking,
Well, in the next, by mid-September anyway.
yeah, it's certainly
I
possible.
yeah, I mean, unfortunately, because I have some September puts, but I should have done October, I guess.
Well, I'm thinking maybe like just from kind of looking at this like freehand here. I don't know. I've been staring at charts long enough to, you know, normally like the timing aligns decently well, but I would say if this wave forward plays out for another couple days, I'd say probably 78.80 is probably a reasonable
Yeah.
stopping point, at least for this kind of run. And if it goes higher than that, then I would say prepare for probably like another blow off top. Because I mean I think you're right. I think they want 8,000, but I think Goldman said something like, go ahead.
If they get close enough to it, it's like a magnet.
Yeah, right. Yeah, exactly. It's like I'll just give it to him, like, but yeah. Anyway, so I just don't I don't see real conviction right now from anybody. I see just a little bit more distribution. I see lazy kind of trading right now. It just reminds me of summer trading.
Yeah, but I mean, I remember 1987, and that's what it was for like weeks and
yeah,
weeks. And it wasn't until October that it finally, late September when it started to roll over. And then, of
yeah,
course, you had the total capitulation. But it was
yeah,
like, I mean, the top was there from the beginning of September. And it just took like the whole month to form.
yeah. And that could be like sitting through like something like this is infuriating.
Yeah, like
where
that.
you
Just like that.
where you see this rounded top. I mean, it's weakness,
Right.
and then all of a sudden, it just blows off into space, and that's
Right. It falls off the cliff. Yeah.
yeah, and that's kind of typical of these long term crazy bull markets is that once you get kind of towards the end, you see a lot of these like you see a lot of these like the weakness rounded kind of top here, and then you get these news driven rallies and forces everybody to cover, and then you just keep it going higher and higher and higher.
Yeah, but look at the low volume right in the middle there.
Yeah.
I mean, there was like nothing.
Right. So I think yeah, I mean
January or whatever.
Yeah.
February.
I think it's certainly realistic. I think that if you look at something like the Nasdaq, oh sorry, I didn't want to flip, but I didn't want to flip too too crazy fast here with the S&P. Don, do you have anything else to say about that?
No, that was it.
Okay, I think the Nasdaq is telling a bit more of a strange story. Last time we talked last week here, what I was kind of talking about is that we've got this long-term kind of weird pattern. So, sorry, here 1 second. I mean, it looks like a bull flag, but if you're drawing these tops, like it's starting to kind of like push higher and expand higher, and so it doesn't really look much like a bull flag anymore. It actually, I this is probably where I'm gonna get skewered for this, but it actually kind of looks like something different. It looks like a series of, it looks like the midway point in a larger zigzag kind of correction here that would, in my opinion, would wrap up by the end of October. So I think like, we're seeing a lot of this lower volume, but we've got a very, very clear kind of ABC. Like, I've, done a bunch of wave counts and stuff on this, and it's just, I keep getting the same answers every time. To me, this looks like a very, in this sort of scenario with the Nasdaq, it looks to me like you get this very clear ABC, sort of counter trend or like dead cat bounce, and then you get a lot of this, consolidation, that kind of thing. You hit a field level high, but then also you just kind of resume the same kind of thing. But it still remains to be seen whether this is actually going to happen or not. But I think that this is still a very plausible scenario. Like before, I mean, this kind of squeeze here wasn't really, it's more like a margin call kind of short covering thing. It really didn't change anything that was systemically different with like the AI trade. So what I'm really looking for here is not like confirmation bias. What I'm looking for is more conviction to the upside. So let's assume that everything is right, and we're assuming that like everything is right with the world here, and we're going to get this this kind of thing. Even with, let's say we do have this kind of like big huge rally up higher to space. I think that you're still going to need, like, earnings were decent, but you're still going to need another catalyst there in order for you to for you to do that. I think we've also kind of gone high enough now where this sort of 5-wave pattern where it just looks a little weird. Like typically you would get, there we go, it looks a little more symmetrical. But what I'm thinking here is, if you do have this kind of super bullish scenario, you have to have some sort of bigger pullback. And typically when you get those bigger pullbacks, that 0.618 is typically where you see that bounce. And it also kind of makes sense because you've got this other support back here. So it's kind of like, you could potentially make like an inverse head and shoulders. So I'd say that's like the super bullish scenario. But, again, if I'm looking at stocks and stretch valuations, I mean, $5 trillion for this company, or for this one, it's a lot. So it's getting a little bit harder to justify the valuations, even with the decent earnings, with all this capex, and there's no real path to paying for that. So right now it's sort of like investors are paying for that, or they're financing this through share price and stocks and stuff like that. But I don't know. It's just, anyways, that's kind of something I've been thinking about recently. Is if you are going to have this continuation of a bull market here, you have to have this kind of pullback, like wave 2 style, and they have to be impulsive waves. Like I said before, you can make the argument this is wave 4 of a impulsive wave, but it still wouldn't. To me, it's not really looking like it's going to make a higher high. And if it doesn't make a higher high, then it becomes a B wave no matter what. And you don't have to really be like a Elliott wave purist or anything. You just kind of have to roll with the punches and the charts and stuff. But typically, when I'm looking at this stuff, to me, this looks like mid correction, where you've got that dead cat bounce, where the smart people are getting out of their long positions. And since Ken Griffin just made a mint, picking up all the shares for cheap and probably unloading them all right here, that's Citadel, right? They're huge. So I think there's still probably just some profit taking going on here, but this is, again, it's still just one scenario. So that's kind of like I'd say the short term. There really is no solid like short term bullish or bearish scenario for the Nasdaq. It's just kind of like, you just kind of have to see what happens, like with the S&P. I think the Nasdaq is still the weakest, but the S&P is really, it's surprising that it made a new high so quickly after you got all this kind of all the selling and stuff like that, without any sort of like answer from the sellers. So I think, usually you don't see a new high with like the S&P, and you don't see one with the Nasdaq. So I think that's it's kind of like a message that maybe not all is right here. Maybe it's maybe this is prime time distribution. So that's I don't want to beat it to death here. That's kind of my initial thought.
I don't know if it's distribution or just a lot of rotation going on.
Yeah, I guess. I mean, even with rotation, there's
like you had the software stocks had a nice run, and then today Microsoft's down a bunch, and the chip stocks are all up,
yeah.
Micron and SanDisk and
Yeah.
whatever.
So, I mean, you could be right about that. I can't.
Seems
I
like
can't.
they're just flipping back and forth between the two groups.
Yes. And then when I'm looking at, if I'm pulling up other stocks, like stocks that have been kind of been beaten up recently. Let's say like Kraft Heinz, right? They're kind of sitting at the lows for a while, but now they're starting to catch a bit here. But they're not really. It's not like the most attractive rotation play is food producers, but I still think it's long term. These guys have bottomed, and you're starting to see some ground that's being made up, ground that's being made up with these longer term stocks that have kind of taken forever to bottom. Like I still think a lot of these guys are below their below their below their like true kind of fundamental value. But if you look at the higher flying stocks like Meta, the point I'm trying to make here is like these guys have been chopping sideways for a significant amount of time.
Meta's been a dog for months now.
Right. So like these guys here, to me, you don't really see a lot of with healthy stocks that are appropriately valued. You don't really see a lot of this kind of big giant sells coming out of nowhere. If you're looking at something like Meta, like to me, these kind of big trails, down. This is what I guess screams institutional selling to me.
It's also earnings reports.
Yeah, exactly. Yeah, earnings reports, institutional selling. I just think that there's those earnings reports usually provide a lot of liquidity. If you want to sell into it, but
Meta has dumped on every earnings report over the last year, I think.
yeah, yeah, isn't it kind of funny how you see like the classic pump and dump for this kind of thing, and that's typically what I look for with that. But
I mean, Apple ran up in front of earnings and then dumped on the earnings.
Yeah, and if you start to look at some more of these other charts, like let's see here, Microsoft. Well, Microsoft to me, I mean, this
that
looks
was
like
the opposite. Microsoft was low, came into it low, and then jumped on the earnings. Lately, you're better off buying the stocks that have dropped in front of earnings and then buy them right when they announce their earnings.
That's right. But I see a pretty clear, like a pretty clear five-wave, five-wave pattern here. And if this is, like, and it also looks like a double top. So there's a couple different things that scream off the page at me with Microsoft, but I don't want to say anything bearish about the mega cap stocks until there's confirmation. But still, like, I look at some of these stocks and I see, some more selling that's been picking up. I see stalling, something like that. Like Google's still good. They're still kind of reaching up there. I think you still might have another run up for a little bit higher yet. Make kind of like a ending diagonal sort of thing. So I think Google's got a little bit more legs to it. But something like Amazon, I think these guys have already kind of completed an ending diagonal or getting close to it. You can kind of see how that's taking shape here. But you don't necessarily need to have like a dump right away. Typically you can get some sideways trading if you're at the top or whatever. Just when you run out of enthusiastic buyers, then that's when you drop. But anyways, I guess the long story short about the whole thing is, when I look at the Nasdaq chart, here we go. So when I look at the Nasdaq chart, I just think it doesn't have a lot of conviction at the moment. But if we do start to see a run up higher, I'd say probably 30,000 is like your kind of bifurcation point here. So if it if it closes above 30,000, I mean technically you could consider that a wave 5, but yeah, I don't know if it would last very long. I think there's a potential here for the Nasdaq to kind of, let's say we do respect the wick. You could see another kind of pullback down like this, maybe extends a little bit lower, and then you could say, yeah, okay, you'll try to get another reclaim here, but if it has kind of topped out and the S&P kind of confirms that, or it starts heading back down, I think you'll probably see a little bit more of a return back to where we had that kind of stellar covering kind of day here on the 31st of July. But so I guess that's I don't want to beat it to death here. I think that's probably good for now, at least with the indexes. I don't know if there's a lot of other stuff that we can comment on, just because there's not a lot of extra price action. It's been very kind of quiet this week, so a little too quiet, I guess.
A lot of chop.
A lot of chop. That's right. All right, so let me go to like the yields. Okay, so inflation was or CPI was right at forecast today. I think I mentioned yesterday that definitely not surprised that it's right at forecast. We've got an election coming up soon here. Plus, also, if you have screaming high inflation, then people are going to be looking at the Fed saying, "Hey, you going to do something about it?" Your meeting in September. So no, I don't think they will. But so I think probably December or anything after the election, I think you'll probably get rate increases because I definitely don't think oil's going any lower. I mean, it might chop around a bit, but anyway, so the yields I think are still on their upward trajectory. Gold here.
There was a guy on this morning had very interesting comment when they were going over the inflation, the CPI report, and what he said was that even though oil's up, natural gas is in the toilet.
Yep.
And that's what's saving the inflation.
Interesting.
And if that turns around and goes up, then they got real problems.
Interesting.
Because that's, natural gas is what's fueling the electric.
Yeah, I suppose. I was kind of thinking about, let's say if you get high demand in the wintertime.
Yeah, but I mean, it's all the data centers are using natural gas. Mm-hmm. The ones that aren't waiting 10 years for nuclear.
Yeah. Okay. I mean, that makes sense. I'm thinking of that a little bit.
So if natural gas ever gets in gear, which we've been waiting for 2 years now.
Yeah. Last September was a bust.
Yeah.
Seasonality. I'm very upset with seasonality these days. He's a crock of crap.
There's another winter coming. We'll see what happens.
Yeah, we'll see if El Nino actually delivers.
Right.
So I think that you still got this like multi-month sort of flag pattern here that's just been creeping along. I also think too you've got some actors here that are trying to keep the price down.
Oh yeah, definitely.
I guess we can also bring up oil too. So oil, I mean, oil looks like it's still kind of following a very or at least like a relatively predictable path. I still think that ultimately you're gonna wind up a little bit higher here, but that might take a lot longer than just a couple months. I do think that it's we did get a little bit of a rise here in July, so you might see some of that reflected in CPI for next month, but I don't think it's going to be enough to move anything. I just think we're just gonna the CPI, like inflation data, is just kind of stuck in neutral until after the election. I think they're just going to be pounding other narratives and other news headlines and stuff. But we'll see. I guess so. Anyways, like the energy trade, I think is still good longer term. It's just you might have to wait a little bit longer. Some metals have finally woken up. About time. They it's kind of funny when you've been pounding the table saying like metals are a good trade, metals, and that it just keeps like grinding and trading sideways. But I do think we've had a decent amount of accumulation, and I kind of think that you'll start to see more enthusiasm for metals as you start to get more discussion around currency, currency and higher yields. So you've got the like you've got the USD, Japan kind of the yen thing. We did have the intervention of the Japanese carry trade. Those guys are going to have to do something with their rates. The Bank of Japan. I think they're also getting really, really close here to this currency pair with the U.S. dollar, where you're going to start to see some volatility here. I think it's kind of right between some moving averages and stuff. So I think you'll probably get more. I think you'll probably get more discussion about that, and I think metals are going to benefit as a result. But yeah, I think right now. So now we kind of see that we've got some energy behind it. Now I kind of think that you'll see a bit of a pullback here. Maybe I guess kind of too soon to tell, but I think you'll see probably a decent pullback, and then that's where you'll want to add for at least like increased position size. I think mine's
we're getting pretty close to the 200-day, so
yes,
which should create a pullback.
Yeah, that should definitely give you some resistance there. You can kind of see how it kind of maps here, where it had a little bit of strength and then it's kind of dropped through, and then it hasn't really recovered since early June. It's actually kind of interesting to see how really not that much time has passed since it kind of broke down. So if it doesn't really stay below the 200 daily moving average, and I don't think it should. I mean, what else are you going to buy? You want to buy mega cap stocks that are overvalued. And
but where's the 50-day?
50 is the purple line.
Okay.
So that was the big one that ended up breaking through
right.
and closing above. So that's good news for gold in general. And if you look at something like silver, I actually ended up taking a short in silver today. I think just very short term. I'm kind of thinking maybe you'll see like something real brief where it tests the 50-day moving average, and if it closes below it, that might change things a little bit. But if it closes above it, then you're going to still test it. I think that's a pretty bullish sign for that. But anything short term with metals, like I don't know, like it would be tough for me to hold on to a short for like longer than a day or two. It'd be one of those things to take that loot and scoot. Especially like with equities too. You just don't know what's going on these days. So anytime you got shorts, you're still vulnerable, but it's a nice way to make some loot if you can time it right, or if you have the right instruments to do it. But you can get your face melted off pretty quickly.
Well, yeah, especially tomorrow morning, depending on what report comes out.
Right, exactly. All right, so let's take a look at Bitcoin here. Bitcoin, I think, is just kind of doing its consolidation thing. Kind of similar to what we were seeing with like metals. I still think that there's a decent amount of selling, but the wave counts kind of jump off the page at me here, where I think we may have seen the low for a while. I think maybe we'll probably get up to like 70,000, something like that. Maybe test this, test the 200-day moving average here, and then potentially head back down. But longer term, longer term, you still got these weird kind of patterns. I still think there's here. Let me. I don't want to mess up my chart here. Let me go to the other one. Oops. No, whatever. I'll fix it tomorrow. So if I bring up Bitcoin here, we'll do the day. Clear out the crap. Here we go. So if you look at this, it does look like a pretty large like head and shoulders just in general. This is on a logarithmic chart, so you just get this, pretty clear, clear like 5-wave sequence, and kind of all the things that happen with that. I mean, I think it's possible you might see, like one of these kind of like bear pennants, that give you this little bit of a like a continuation down. And that should be it for a while. So I'm kind of thinking like, okay, maybe 50,000 ish, kind of where it was back here, 49,700, that kind of thing. I think is a realistic kind of like ending pattern. I'm also looking for stuff like this where you might see, Yeah, so you might see, let's say, kind of jumps up higher, but you still might see like an ending diagonal here. And then I think you'll get I mean, again, that's just one possibility. Then I think you'll probably get a longer term kind of big boost in crypto again, but we'll see. I still think it's it's kind of been neglected recently. All right, so I guess so if you look at SOX, SOX I think is getting kind of ready here to maybe take a break and roll over. It's kind of looking like a pretty strong ending diagonal. So kind of the this is like a callback to the Nasdaq chart that I was showing earlier, where you've got this kind of like double zigzag, whatever you want to call it, kind of pattern. I think it's entirely possible. You kind of see some topping around here. We've got some pretty strong sell delta here, so it looks to me like there's a lot of interested parties in shorting this beast at 550. But in this case, you could get this. It just kind of looks like a really rally, and like you might be able to get maybe a little bit more height out of here, maybe hit like like 580. But I do think you'll probably see some sort of retracement. So other than that, yeah, we just gotta kind of wait. I think if you're looking at something like Nvidia, I'm not very confident in this this like ABC up here. I think it's probably going to be more of like what you call like you might get some more kind of creeping up here, create like some sort of ending diagonal. Then they got earnings coming up, so maybe it might be a sell for earnings. I mean, it was a sell last earnings. So this is sort of like your recovery, the pump before the dump, kind of thinking you might actually get something a little bit.
Been a sell on every earnings lately, last like 3 or 4.
Yeah, so I think you could see some longer term weakness. Even though it's a leader, it's like once these companies stop spending $200 billion a quarter or a year on the AI stuff, their big revenue stream for chip sales and stuff for GPU sales, where does it go? So it takes a long time to build up this kind of market cap, but if you can't keep the growth engine going, it just doesn't really have any staying power.
The best trade the last 3 Nvidia earnings has been to write the calls.
Yeah, I might do that.
Well, I mean, I don't do that sort of thing, but
yeah, I hate trading the earnings, but
the volatility was so high every time, and it just crushed after each earnings report.
yeah, that is nice, or maybe like a calendar spread or something like that.
That would be good.
Yeah. Send me a DM. Let me know what you do with that. Maybe I'll join in for fun. Anyways, so let's take a look here at the last guy here. It's Tesla. I wouldn't short it, but just because I kind of think it might head up a bit more. But I kind of think this is kind of coming soon here. This bear target low here. I may add like a short just as a hedge for my open long position after it got clobbered with poor timing. But hey, earnings. Who expected them to to surprise that much the downside when just a quarter earlier they had a surprise at the upside.
Yeah.
Well, anyways, make choices
and
and
a
live.
real disappointment.
Yeah. So I kind of think you might see like this might be like a tiny little B wave, and you might see it rip a little bit higher, but then ultimately you'll probably see like a 5 wave down to kind of finish up this last little leg down, and then I think that's a viable dip for I think a decent amount of time, probably up to maybe like 380 again, but we'll see. So yeah, I mean that's kind of it, I guess. One other thing I've been thinking of is if you look at let's see here, net Bitcoin. So if you look at something like Nasdaq, it just looks to me like it's just getting tired. Like it's just, you kind of see a lot of this selling. You've got some buying there, obviously, but I still think it's like they're swimming upstream. And we haven't had a test of the 200 200-day moving average. And in this last one that we had back in March lasted like 3 days, but anyways, I still think it's, I think these guys want to test it again. And if they do that, we could see 26,000 again, maybe like 26,300 before any sort of, measurable like dip buy. But again, that kind of like, you kind of see this sort of pattern again. So I think, you might see that, but I don't know. I don't want to be accused of being too bearish here, or, being a party pooper, because you got the Nasdaq doing this, or sorry, the S&P doing this. But anyways, that's it. I'll leave it there. And I know we're at time here, but yeah. So anyways, I guess hopefully that makes sense. Stop me if I'm crazy. I guess I'll stop the recording now here. Thank you
Only
guys.
time will tell.
Yes, only time will tell. Here, I'll stop the recording. Thanks for watching, and don't like and don't subscribe. All right. Or do it. I don't care. Hold on 1 second.